All right, and we are recording. We are back for Friday Night Forex and Chill, covering market structure. One of the most beautiful examples of market structure we had today was definitely gold. It played to a T. It had pulled up to a previous demand supply zone. It rejected out the supply zone, gave us a beautiful flag on the 15-minute, and then sold off. It's now creating another flag, which is our correction, and should continue to sell. Since we're in an overall uptrend, it'll probably just correct to previous support and then continue up. I don't know if any of you follow fundamentals, but when the stock market is going down, gold and silver and the yen go up. And when the stock market is going up, gold and silver and the yen go down. And as we saw today, the stock market bounced back up and we had a drop on our commodities. But we'll start marking this up from scratch because this was a really good trade for those who caught it. After the break of the trend line, I had 143 pips. If you caught it from the first two flags, the rejection off the support zone, you got 186 pips. All right, I'm gonna completely clear out the screen and show you guys how I mark this up and how I trade gold. So market structure, we are looking for our overall trend. We're looking for price action and what a pair is doing. The way you mark this up, you mark up everything: currency pairs, indices like US 30, and crypto pairs. So market structure applies to all pairs. So we use trend lines predominantly to box in the market. You can also use horizontal rays or rectangles to annotate your supply zone. Our supply zone is where sellers take over the market, and our demand zone is where buyers take over the market. Okay, so let's start with gold. Our most recent trend with gold, it's been on an uptrend, up, correct, and now heading up again. And that's on the monthly. When we're drawing trend lines, we go from candle to candle or wick to wick. We don't want to cut off any candles or wicks or go through any forming candles. And of course, since we are on the monthly, one candle equals 1 month. Then we go down to the weekly. We still have the same bottom support here. If you want to draw top support, you can use a horizontal ray here. If you want to box in your uptrend or showcase your uptrend, you can use another trend line. And of course, we've had a strong push from the bottom up, so it was time for some correction. If you look left at this area here, I'm going to put this on there and take it off. You can see dragging it to the left because one of our most important rules when trading is always look left. And we're going to put 1297 there. You can right click on these, go to settings, put coordinates. We like to deal with even numbers. If we look at the 1297 price range, we can look at how price has played around this area in the past. So again, if we had looked left, we would have seen it was due some correction and it sold off today. All right. I'm going to take that off there. And we will go down to daily. So what we are doing is boxing in the market. We are putting it in a corner. We're putting baby in a corner so we will know what she's going to do next. All right. Again, looking left here, that is a very important price range. Again, you can use your horizontal ray, and some people like to put a little zone here. Whenever we're marking off our supply zone, which is our seller zone, we look at the area that caused the most recent downtrend. That would be this candle right here. And we cover that candle with our rectangle to show that that's the price that caused rejection and a sell-off the last time. You can do the same thing if you are drawing a demand zone where buyers took control of the market. We're going to go with the most previous price action because if it bounces off here, we would expect it to come down to here. If you want to put more horizontal rays to give you some, if it breaks through this, you would go to your next area, like right here. If you don't like a lot of marking and annotations on your charts, horizontal ray is the way to go. Okay, we know that the market moves in 3 ways. We get our impulse, correction, continuation, and we're getting our corrections along the way. So this had pushed up a long time without a deep correction, so we could see this come back to the trend line before continuing to push up again. But we don't enter off the daily, so we're going to break it down to the 4-hour. Let me just turn off this right quick till we're done. Here, from our previous supply zone, demand zone to our support, we could draw a trend line here. Let me clean that up a little bit. And this is where we had a break today and a retest. So going down on the 15 minutes, if we had been looking to trade this pair, the rules that I follow when trading a pair, and everyone should have their trading rules, is I like to trade from zone to zone, okay? I see that this is an uptrend, but I also see looking left at the last time it was in this price range that it sold off. So I'm looking to see that I am a seller zone. I put my trend line on there. Your MACD for confirmation had crossed up into a buyer's range, but once it got to that point, you see it has crossed over on the MACD to the downside and the seller's range, and your 2 lines up here have crossed over. So if you want to get in this trade early and you see it rejecting, and you see it form a flag, you could have entered on your flag. And that's why I was saying we're going to start covering patterns. This flag, whenever you saw this sell off and start creating flags, you could have sold at this flag here and got in, or this was a beautiful, perfect flag. You could have sold this flag and got in. Now we have another flag being created. All right. So anybody got any questions about this so far on this pair? Thank you, Grant, for answering questions. If anybody has any questions, feel free to unmute yourself as well.
I'm sorry, I just jumped in. Quick question. How did you set up your lines of support and resistance? What were you looking for?
Well, I'm going to show you. I normally like to do my supply and demand zones on the 4-hour. When you look left, you want to see areas for supply where sellers took control of the market. So when you supply someone with something, you sell them something. This whole area here has been a strong area for sellers. It sold off here, corrected, sold off here and corrected, and we were due for a correction anyway. Anytime you get into this area of consolidation, you can start looking for a sell-off. You can also start looking for a correction once you've had a big push with minimal correction. Then for your demand zones, which this would be your major demand zone, that was your previous low. But you can make demand zones and supply zones in between, especially when you have a big gap like this. Because the last time it sold off, we had 2013 pips, okay? Since it started pushing up, even though we had some consolidation, it has pushed up 1,364 pips. Right here, it pushed up about 783 pips, and then we got a correction of 415 pips. But anytime, this is a hard pair, harder than currencies because it doesn't move as much as them. It's either normally pushing up or pushing down. We did have a lot of consolidation going on because of the fundamentals. But yeah, I'm gonna show you guys another tool that I found. I just started using it like 2 days ago to just test it out. I go on my daily, and the indicator is called pivots. And if I turned it on my daily, it gave me the pivot point. You know, the pivot point is where the market price saying that it pivoted, right? And it gives you your resistance 1, your resistance 2, and your resistance 3. If you look left, these line up with your previous supply and demand zones. Now, what I did is, and this was, like I said, this was just testing it out earlier. You can draw you some triangles over these. Not triangles, but rectangles, excuse me. Then I would turn it off and hide it. Because if you leave it on, you take it to a lower time frame, it's going to give you, and this, let me show you some settings while I got it up. Looking at this pivot, you can go to the settings, and for inputs, I wanted mine based off the Fibonacci because I love Fibonacci, and that's one of the tools that I like to use. You can have traditional Fibonacci, whatever, but I put mine on Fibonacci. Number of pivots back, I usually just put it back to 1. And style, you can change it to the colors that you want. So you would find this under indicators, and you would just type in pivot, and I'm using the standard pivots. And of course, pivot is just where price usually corrects or turns. And if you look left, you had strong sellers here, a strong sell here, a strong sell here. And again, I used it on the daily because if you leave it on when you go to a lower time frame, it will adjust to that time frame. So if you want to, goodness gracious.
So you use a 4-hour to make your decision then, or do you go to lower time frames?
I make a 4-hour to determine where the market is going. I go from the monthly all the way down to the 4-hour, but for entry, I'll go to 5-minute or 15-minute. Okay.
So like gold drop, like it did a huge drop. Would you have waited till you saw it reach the on the pivot and then gone to the trade, or what?
No, I like I said, I just started using these pivots.
Okay.
Something I saw someone on a training class doing, and I said I was going to try it out. I sold off because I'm used to trading gold, and so I'm sort of familiar with its personality, and I knew it had reached an important zone, and I knew it was time for it to correct down to this trend line. Most of the times you see a correction, you'll see a pair push up. Remember, we usually get 2 or 3 bounces off a trend line. 2 bounces confirms the trend line, 3 bounces confirms the trend. So this basically just confirm we're in an uptrend. It'll probably bounce off of this and go up one more time and give us a drop unless it continues to push up. But we were overdue a correction. It hadn't corrected to the trend line since way down here. It was at a supply zone, and on the lower time frame, if you zoom in, you had already getting smaller flags. You had all this rejection coming off here. You had a sell off, a flag, another flag, and this was like a classic flag structure here. And you can sell at the top of a flag and put your stop loss right above the flag, or you can sell at the breakout and put your stop loss right above the flag. So if I had entered here, I could have got away with a very small, like 30 or less pips. If you want to be conservative, you could have got away with a 10 pip stop loss here above this previous candle that brought it into the flag. So anytime you're selling off of a bullish flag, sell from the top of the flag, or if you want to be more conservative, wait for the break of the flag. And each time you would put your stop loss right above the flag. So if we started tracking this flag here, and this is just the next a pennant is creating, we are going to sell this either from the top or wait for it to break out and come down to our trend line. Once it gets to our trend line, we could start seeing it correct back to the upside and give us a retest of this area. Now, again, I used the MACD, if you see, and this is what Lindor is teaching in iMarkets Live with that bounce back strategy, which we'll cover tonight. You see on your MACD, it had crossed over here. When your orange is on top, you're going into seller's market. Also, the darker this red, the stronger the bears are in the market. and it had crossed over your 0 line here. So I had several different confirmations. It had bounced off my supply zone, had created a flag. I had my crossover on my MACD here and here. All right, that makes sense?
Yeah, I get it.
So yeah, just make you like a list of rules that you would like it to meet. When you're looking at your entry.
Quick question, your original trend line that you drew, how did you come up with it? Because I'm not seeing it touch any of the highs or lows. You know, I don't see any, I just see one long trend line. How'd you come up with that? Okay, I see it. You did it on the
higher time frame.
On the 4 hour. Okay.
Right.
All right. I got. So now looking at if I'm looking at it correctly, since it did drop, you're looking for probably a buy at some point to get back to the resistance.
Yes. If it doesn't break through this and hold, then I would definitely be looking to buy it back up to about 1,300 is where it reversed.
Yeah. I got you.
If it got here, and you see we're already getting some push up here, but it should cross back over. Let me throw that 35 back on there. If you use a 35 moving average or smooth average, and you look on your higher time frame, you see we're still in a push up, and we would want to see it come back and retest this and bounce back up and not break it. If it breaks below this, it'll be back in a downtrend. We use market structure for trading. We just use these type of things for confirmation, not to trade solely off of. So you see when it crossed under this 35, it held all the way down here. We had our consolidation, our first push up, our retest, and then it pushed back up. So we could see it come back up to.
Okay, you're using the 800 as your EMA. That's what I'm looking at.
No, okay. Someone mentioned that, and I turned it on, and I very seldom. I haven't used moving averages in like a year, but I've been seeing people using just for confirmation. I've been playing with them, sort of like testing a different strategy. This is the 35.
Okay, so pretty much you use support and resistance, a flag pattern, and a trend line, and then the MACD to make a confirmation before you get into a trade.
99% of the time, that's all I use. Yes.
Okay.
It's just I've been seeing people, use the moving averages as further confirmation. And for people who like to use those, I like to be able to explain them. So I like to be a master of one trade and a Jackie of others.
No, I feel you on that one. Quick on the MACD, if I'm using the MACD support resistance, do you have to worry about drawdown, or it kind of stays, like you don't really worry as much drawdown with that?
Let me look at the MACD on the higher time frame. And again, this pair is a little bit
I know gold is
than others.
Different. I mean,
but you see, it was in an uptrend. It retested and bounced off and went back up in an uptrend. If it hits it and pushes back up again, we would see it go back up to like the 1309 area. So it does bounce off. You see here, it stayed in a consistent downtrend.
Yeah.
When it crossed over into the downtrend here, it stayed completely under the MACD until here. And when it was touching, you were getting your corrections or your pullbacks.
But it stayed down for the most part. I got you. Okay.
So whenever I go and cover the bounce back strategy, I'll explain that in more detail because Lindor is teaching a lot of it. If you're in the IML bounce back,
yeah, I know they got an app for the bounce back. I'm still on the fence if I want to pay for it or not. But
well, it's free until February 1st.
Okay. All right.
So, all the trades that it went in today, all the trades have been hitting, and I'll show you that. I back tested it. I usually don't use the products because I like to watch. IML TV is my favorite thing. So I use IML TV to learn, but you can use what you learn on IML TV for confirmation of those trades. Like here on the AUD USD, even though yesterday when we had the flash crash, we see it came back up to previous structure. I had drawn this line on there before it crashed when I had analyzed the chart the day before. So let's mark up AUD USD just to give us a example of market structure. Here, since we don't have like a definite uptrend, it's been trading in this zone. Instead of drawing a trend line, I'll use that, and let me zoom in a little bit. Give me a good price. I like to make mine even prices. Let me try 701.
Look at that doji. Oh, oh, that's so sexy.
Right there, right?
Oh, she's sexy. That's sexy.
And we could put another one. This has been trading in this zone for a while. 8030. Let's see. So we'll box in that. Let's see, it could go a little bit higher.
So you're doing the bounce back with this new chart for the AUD, for AUD US?
Oh no, I'm just doing market structure.
Market structuring. Okay. All right. I see you doing the trend. All right. I got you.
Where is the bounce back sessions?
I'll cover that at the end.
Okay. Because I think somebody said that it's free until February, but
February 1st, yes.
So it's a new product.
Yes, it's a strategy that some other people have been trading, and so they created a software that will automatically duplicate what the strategy teaches.
Okay.
And so let me do something real quick. If we see, because I usually explain this to people, if we see, the reason we don't like to, when we draw trend lines, is go through wicks. You see this wick right here on the monthly. When we go down to the weekly, we've missed all these candles, even though they were wicks on a higher time frame. So that's why it's important when we're drawing trend lines. Right now, I'm just trying to draw some supply and demand on this pair. Okay, we can draw a trend line here. We got 2 touches, so we got a valid trend line. We didn't go through any candles or wicks. Or another thing, you don't want to cut through a forming candle. This candle has completed because the week has ended, but that's one of the rules. We don't like to go through forming candles because it hasn't finished completing. So it could end up here or down here by the end of the week. All right. Now, if you want to, you can look left and find your areas of support and resistance. Now, the difference between support and resistance is supply and demand is where the market makers take over. So this is where the sellers take over, and our demand area is where our buyers take over. The stuff in the middle is your support and resistance. So here's an area where we see a lot of turns to the downside. So we could use that area. Just pull it in there and get you a couple touches off. That looks like 0775. And you would look for one more area, and you use these as your take profits. Right here's a good area, 073. So what I would expect from this pair, it did have a bullish move to the upside. So we could see some correction, come back and retest and go up. If it doesn't break this trend line, come back down. If it breaks the trend line, go back up. So see here where it sold off, it came down, went back and retested, then we got our steady climb to the downside. See, we've boxed it in on the daily, so that's a big move. But that's our most recent support and resistance levels on this pair. So, and it's also trading itself into a corner. Whenever a pair trades itself into a corner, you will see a pretty good breakout. So we could see it do this, and then a big move to the upside. So even though we had a big bullish move, we already started getting some exhaustion right here in this area. And if we look left, that is a little area of consolidation. So we could see our correction and then another push up and test this line. So this pair, I wouldn't trade it unless it came back to the bottom. Then I would start looking for buy signals from the bottom down here. Because right now it's in the middle of no man's land, and you don't want to try and buy it for, well, it's 178 pips, but still, because of where it is, and it's the first push off, and we have this long wick here where we had the flash crash, I would wait to see what it's doing. It hasn't even made a flag yet to the upside. Now, speaking of flags and patterns, this is a bullish flag. So when you have an impulse correction, then you would buy from the bottom or buy from the breakout for your buy, and the opposite with the bearish flag. If you have a sell, you got your correction, you would sell from the top or sell at the breakout and put your stop loss right above your flag, right? So that's the kind of action, price action you want to see happening there before you would look for a buy. Now, if you get something like this, and then it gives you your flag, then you could buy it up. Then you could catch from here 170 pips. But what it's doing right now, I wouldn't get in it. It'll probably open Sunday with gaps, but just look for a pattern to form. If each pair, you can look to the left and see how it typically forms its patterns. Trying to look for the last time it was in a good buy. Let's see, daily. So the last time was January 2016. I don't know if it'll let me go back that far. All right, so always back test any of your strategies. So if you're looking at the way this pushes to the upside right here, we have June 2017. So we can go to our 15 minutes. Instead of scrolling left, go to the bottom, click go to. And 80601, oh, it was 2017, right?
I'm sorry, where did you click to get go to?
At the bottom left, like right down here. So the last available bar it gave me was here. But you see when it pushed off to the upside here, it gave us that long flag. So you could have bought from the bottom, or you could have bought from the breakout up there.
And when you're saying to put your stop loss underneath your flag, you mean the flag on the 15, or the flag on the lower time frame, or the flag on the time frame that you're trading?
You do not want to use a higher time frame for your stop losses, because you will be risking a lot of pips.
Okay.
You want to get the least amount of risk. You don't want to risk like 50 pips to catch 50 pips.
Okay.
Okay. A flag means correction or consolidation. Yes, consolidation in that price point. Anytime, if you watch Stevenson Lindor on IML TV, which is who I watch, you know, he talks about flag patterns. Anytime you see an impulsive move, you need to see a correction. The impulse confirms the trend. The correction, the impulse tells you what direction we're going. The correction confirms it. And then you get your continuation. So you have an impulse, correction, continuation. Impulse to the downside, correction, and continuation. Now, when you have the channels, you wait for it to break out of one of the channels, or you can buy from the bottom and sell from the top. Triangles the same way. If you had a buy and it was trading itself into this wedge, you would wait for the breakout either way. Okay. These are some different flag patterns. You want to start going through, back testing, and looking at these. Like if you see this bounce off here, then get here, look for a sell breakout to the bottom, and the opposite here. You had your impulse to the upside, you got your flag, and then your breakout to the upside. And the opposite here, you had your sell, your flag created, and your breakout to the downside. So start looking for those patterns. We'll mark up one more pair, then we'll go look at like the bounce back. What moved good this week besides gold? GBP. I know all the JPY pairs fell.
Odd moved really good.
Euro odd.
Yeah.
Let's see. Yeah, I see it bounce. Look, I was expecting it to break here, but you see we got that fake out, then it broke. I must have drew this last week because it's still on there. Let's see. But that just goes to show you market structure was respected. Give you a fake out and then it sold. And just like I was saying, I expect gold to get here, retest, then come down. This basically respected that trend line, and that's only our second touch. So hopefully it'll break on the way down. All right, let's mark this one up from scratch. But see, this is what I had told it to do. Look, boom, we got it. I like looking at my old charts and seeing that it did what I wanted it to do. All right, so we'll start on the monthly. We'll go with the most recent uptrend. I'm not worried about all this back here. This is back when I was watching Lawrence Welk and Hee Haw, if any of you are that old. And American Bandstand, of course. And Soul Train. Anyway. Hey, don't y'all laugh at my age. I had a birthday last week.
Oh, you're not that old.
Nah, let's not say it out loud. Let's not talk about my 3 grandkids. But here on the weekly, you see this pair fakes out a lot. This was one of the first pairs to break my heart because of this, stuff like that. Stuff like what happened today, a strong wick to the upside. So even though we want to showcase this area here, we can't discount this wick because some pairs, whenever you see a wick, it was either news that caused a sudden spike, or they knew people were looking for a rejection in this area. You see, every time it got here, it rejected. Looking back, every time I got there, it rejected. So the market makers know, oh, they're looking for a rejection. They're looking for it to sell. So they gave us a big push to the upside, and they killed everybody that had pending orders for the sell. And so everybody was like, oh, it's going to buy. So people started buying, and then they dropped it back down and killed everybody. So they killed 2 birds with 1 stone on that move. Tricky, tricky market makers. You see that one candle? Broke a lot of hearts. All right, so even on the daily, we can box it in a little bit tighter. We have impulse, so now we need to see a correction and a continuation, which we will probably see on a lower time frame. Look at that. It's still respecting this trend line. Let's clean it up a little bit. So if the market doesn't open with a gap to the downside, we could see it do this and then come back through. If it opens with the gap down here, you want to look for a flag to form and some of this, and then sell it down to here. So if it opens with the gap, which it usually does, you still got over 400 pips you could catch to your previous demand zone.
So, quick question. Are you saying it's going to go to the downside because you see it's approaching the corner, and that's why you're like, it's running out of space? That's why you're for sure it's going to go down? Or
if you look left,
yep,
every time it's reached this price zone, the last few times it sold off. They gave us a fake out to the upside. Now, if this candle here had went up and closed, then we would have looked for it to go to the upside.
Okay.
Because we're always looking for impulse, correction, continuation. So if this right here had been impulse, correction, we would have got a continuation. Then we would go to our higher time frame and look for the last time it was in that area where, and even look here, it faked out there. So it's been, even on the daily looking left, we can't see a previous high. So then we would have to come all the way to our weekly to look for a previous area. But even on the weekly, all of this is a strong area of consolidation. It pushed down here, 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 here. So
And push down. Okay.
yeah, we could see that on the next bull run up, but this one is looking like it's going to stay to the downside because it faked out and failed to close. Let me take everything off of here. If you look at this area right here, it faked out. Your phone thought I said Siri, didn't it?
There are 10 Italian cereal on matches for week.
So this is a clear rejection. This is a clear price rejection off of this prominent area, which let's see how close we can get the price on this. Settings 1.635. Let's see
Hey,
when
Gigi,
high.
when you get a chance, can you go ahead and draw that trend line again, but actually going through as if
Destroying the break. You're talking about show the break.
yeah, not that one. No, when you draw that trend line from the bottom to the top there, draw it through there as if that
Yeah, you're talking
move
about the
didn't
break and
happen.
retest.
Right, exactly. Yeah.
You're talking about get our flag and then our
Uh-huh.
continuation to the downside.
Exactly. Bingo.
So yeah, that's what we'll look for. If it gives us our flag,
Mm-hmm.
um,
Back up the brakes truck.
like
Let's go.
we will be looking for this, then we sell it. And that's going to be a big drop. Okay.
Mhm.
If it drops from there to our next structure, like I said, it'll be over 400 pips. Well,
Ooh.
773.
Ooh.
That's on a 4-hour time frame because we got from here to up here, we got 1,000 pip move. And what does the market usually give us back? 50%. So if you want to do a 50% retracement, you draw your Fibonacci. I usually go week to week, but since that didn't hold and since it was probably news, I hate to use it. Even at 50% or 61, look, 61.8 lines up with this area right here. So that lines up perfectly between your 50 and your 61.8 on your Fibonacci. So you could see it sell off to here as a take profit one. Get some more correction and then sell off again.
Quick question, Chase. So like it did do a quick wick to the buy that took everybody out. If we're in real time, we don't know that that's what's going on. So when would you enter that trade? Since it was a
The
rush.
reason I would not have entered a buy here is because
I mean, it's
area
to sell.
or for a
Right.
sell, I would
Right.
time 15-minute time frame.
So yeah, let's look at
Oh,
50.
wow, look at that. What is that? That is so beautiful. That is like the most perfect flag ever.
Oh, that's textbook. Oh
That is
my God,
textbook.
that's
Yeah.
textbook right
So if you had caught that on the 15-minute,
Ooh.
But my thing is, in real time, you wouldn't know. I mean, because if you're doing
yeah, in
real
real
time,
time, you're going to see this forming and you would have sold it here or at the top.
No, Gigi,
But-
he's actually talking about that spike up. That's what he's
that
asking.
spike
How
up
would
in
you
real
know?
time. How would you know that spike up in real time? That's a spike up. He says buying. How do you know it's a fake out? We're talking real time, not after the fact.
I never buy an impulse.
Okay.
You got an
Gotcha.
impulse, I would have waited for a correction. You got a bull move. I mean bear move here. You would have waited for impulse because you weren't expecting that breakout because you were sitting at your zone. You'd
Right.
waited for this, then you would have bought. If it had given you this, but in reverse, which let me show you that. You always look for patterns, like Lindor teaches us.
Yeah, I gotta watch my IML Lindor.
Yeah. Before any move, you get a pattern. Okay, so if I take this and I flip it, or should it be mirror? There we go. Now let me flip it back the way it was. All right, you would have seen this, then you would have bought. That makes sense? You would have had your impulse, and your flag and continuation of your buy.
Gigi, can I interject here for a second?
Mm-hmm.
All right. Hey, sir, the answer to your question, how you would have known, Gigi, if you can put your mouse right there on that, right there before they bounced up, just bring it down a little bit further.
Right here.
Right there. Exactly.
Yeah.
Now that was a stupid reversal. Okay. That's how you would have known, because see, theoretically, we know that should have been a drop down to that trend line. But since it went up, that's when you would have known, boom, this has got to be a buy, because it did the total opposite. Anytime you see a formation do the opposite of what textbook tells us to do, that means that the market makers is about to go ahead and do something crazy. And that's the reason why they shot it up. They shot it up because there were a lot of pending orders
Yeah,
sitting
this is a very popular pair.
Mm-hmm.
And anybody who trades market structure is going to be looking left, and they're going to be expecting this. So they probably, the people who control the market can look at their computer and tell exactly how many orders they have here and what they're worth.
Mm-hmm.
So they knocked people out.
Mm-hmm.
And then people started buying, and what did they do? They knocked them out, gave us the most beautiful flag ever. See, if you had seen this, do that, and then create a flag, then you would have bought it up to the next zone. But it faked us out. This is a textbook fake out.
Mm-hmm.
Okay, so it faked us out, and then it gave us a sell. This was a bearish engulfing.
Mm-hmm.
It created a beautiful flag, and then just kept flagging. And then it gave us another flag, a long flag, and then sold off. And if we take all this off, go back to our 4 hour, and we had the trend line showing the break, because we would have already had this trend line there because we have been following it up. We got our break. Now we'll look for our correction and our continuation. Probably get to this here and get some more pullback, and then continuation down to here. Oh gosh, I hadn't seen all these messages. Sorry, guys. Oh, thank you, Grant. If anybody has any questions, please don't, the cheat sheet again, right here. And you can Google Forex patterns, and there's a baby pips on Forex patterns as well. But you have like expanding triangles, and you'll see the bounces off these. And you'll look for your entry. Either if you're buying from the bottom. If you're selling from the top. Or the safest way is to wait for the breakout.
I think you had another one there, another cheat sheet.
Oh yeah, there's and I had pulled up another one on baby pips before I got kicked off earlier. Y'all can screenshot this if you want to.
Where and when can we go back and watch this video again?
I usually, after it processes, I upload it to everybody.
Go back.
I'll tell you what, let me start at the beginning. Everybody can screenshot this one. And just let me know when y'all are done.
So I noticed you use Trading View. What about MetaTrader 4? You don't like it or what?
Well, I like Trading View because anything I draw up on Trading View on my computer, I can log in anywhere and see it. And it also transfers over to my Trading View app on my cell phone. So like if I put break of a trend line alerts, which I'll show you next. I had meant to cover that last week. Yeah, I will get an alert to my cell phone. Like I got an alert for AUDJPY. So I knew that when the bottom fell out the other day, my phone went crazy. And you can create alerts on your MT4 at home, but it won't come across your cell phone. With TradingView, it will.
Okay.
All right, everybody good on this one? All right.
Yes.
All right, you screenshot this one. I think there's like 2 more.
I got it.
Everybody good? This one, I don't think we need. Do y'all want this one? And again, you can Google Forex trading patterns, and you can just hold, if you're on your phone, just hold the picture down and save it to your cell phone, or if you're on your computer, you know, right click and save it. Or like the YouTube we were watching at the beginning, he covers most of these. Because these patterns form, and then you know when to buy. These are the most important things about entry. You can swing trade off of a higher time frame. I know like Kim Torres, she's a really good trader. She trades zone to zone like on the daily and the weekly, and all of her trades usually hit. But the way that I trade, we get tighter entry and a tighter stop loss. She's an excellent swing trader with great setups. But I like trading on getting my entry with a tighter stop loss and a tighter entry. All right, and this last one. Let me know when y'all got
Mute
that.
your mics, mute your mics, mute your mics, mute your mics, mute your mics.
I got it. All right. All right, I'm gonna click back over to Euro ALD. If we had wanted to set an alert for this, you can right click on your trend line and do add alert on trend line. Me, I put once per minute and I create it. And see, it's already broken, so that's no good to me anymore, but this one here on AUD JPY the other day, it broke. And this is it. When it broke this, my cell phone went crazy. But yeah, that's how you create an alert. You can create alerts on trend lines, EMA crossovers, and all types of things. So if anybody's talking, I'm sorry, I muted everyone because of the background noise. You can unmute yourself if you have a question. So yeah, if you want to trade this Euro AUD, let's just strip it down. Let's see, we already had our trend line break. You can draw another, go to your 15-minute. And draw a trend line there. And trend line there, and wait till it starts forming its flag. You can draw trend lines around your flag and put an alert on the bottom for if you want to catch it when it breaks out to catch the sell continuation. Because it's already starting to create a flag.
I have a question, Gigi.
Yes, ma'am.
The previous one you showed us where you had an alarm and there was that like a fake out going all the way down. The previous pair where you were showing us.
AUD JPY. That's when they had the flash crash on the yen pairs and the AUD pairs the other night when Apple lost billions of dollars. As I was saying at the beginning, the yen is a safe haven. If you look at the yen by itself, JPY, WCU, and let's look at it on the 4-hour. You see how the yen itself shot up? Whenever we have trouble on certain markets, high dollar investors will throw their money into the yen, and they'll also throw their money into gold and silver, commodities like that. Like I was saying, when the dollar is crashing, the people that have money that can move the market, they will move their dollar to safer vehicles, investment vehicles, and JPY is one of those vehicles. So that's why you've seen a sudden increase on the yen, because of the dollar was in trouble, the US markets were in trouble, things of that nature. Yes, I do have a TradingView subscription. I got it whenever they had the Black Friday sale. Because if you buy it like during Black Friday, the week of Thanksgiving, you get it for like 40 to 60% off, whatever they're running at the time. One thing you can do is you can upgrade You can upgrade to the subscription. I think you get like 30 days free, and at the end of that 30 days, if you cancel, they'll come back and they'll offer you a discount. That's how women shop. That's how I got it the first time. I did the 30 days free, and right before the 30 days, I canceled it, and then they started giving me, subscribe now, we'll give you 25% off, and I think they got up to like 30% off. But now, covering market structure, does anybody have any questions? If not, I'm gonna cover a couple of these IML bounce back. It says no longer valid. Come on, reload. I back tested these today, and all of these, even though they say no longer valid, they all hit. And you can go onto this because this is TradingView. This is the TradingView platform, and you can mark these up to get your stop loss and take profits just like we did. So let's see.
How did you get to that screen?
imlbounceback.com/web.
Okay.
And there's also a Telegram. The Telegram sends you an alert telling you that a new trade has dropped. So like today I was testing these. Let's look at Euro AUD, and you can take it down to, I like to switch it every candles. You see it's got the MACD. If you click on Stevenson Lindor, it'll give you the one with the MACD. That's the one I have set as mine because I use his trading strategy. If you use the one with the RSI, you would click on this other guy's photo up here. Yeah, this IML bounce back, you see a lot of people posting about it. All these trades have been hitting. It's been phenomenal. If you're busy and you work a lot, you can't always be at your chart. It's a good tool to have. And if you've already marked up your trade and you're looking, and it's based off of a strategy that people have been using, using the Bollinger Bands, the star, and Stevenson added the MACD on here because it's a volume indicator. Whenever it crosses the zero up, you're in a buy trend. When it crosses it down, you're in a sell trend. And also, like if you see here, when this crossed, you went into an uptrend that lasted until the cross right here, 668 pips. Okay, but this is on the daily now. But that move where this crossed over and the MACD had crossed over gave us a 668. It had bounced off the Bollinger Band. The what is it called? PSAR, whatever it is, I don't use it, had went under it, showing all of these indicators had shown that it was in a buy. But if you also look left, just like we're learning with market structure tonight, look at this zone. It was in a critical buy area already. So these indicators just confirmed what market structure had already told us, that we were at a critical buy area. But going back to the trade, let's see.
And I'm sorry, how do you get the Telegram?
If anybody's got the Telegram link, post it in there. It'll just tell you a new alert has hit. It's also on the IML bounce back page on Facebook.
There was the bounce back alert just came across.
Yeah, Gigi, I was just going to tell you, a brand new alert just came up. If you refresh, you might see it.
Is it doing crypto or something? Maybe it alerted them that I was on here hacking their page. No. GBP USD. Let's look at this one. You can go back and back test it, and at 1.26013. So I will go on here, and I will give me a horizontal array, and I'm going to put that price 1.26013. So this is where it had told us to buy. If we look, let's see, the date was, I'm trying to remember because Lisa and I sat here and did this earlier. Even though it's on a higher time frame, you can take it down to a lower time frame and look, and this is the area. Now, what Lindor is telling us to do, if we want to be extra, you can just go ahead and buy it because it's already done the the fundamentals for you. Or like he said, if you want to draw it up the way you would do market structure, you could draw your trend line here. You can confirm that you've had a break to the upside. Goodness, I can get this done. If you look, you've had a crossing here at the MACD. It's crossed to the upside here. It's crossed to the upside here, and we got a strong push. If you had bought it the first time it told you to buy it, you would have gotten 93 pips. It came back and retested the same. If we're using the same market structure as we're learning tonight, if you look at this area right here, came back and retested it and rejected it, and you could have got another buy in here. It's got it on Hakanashi. Hakanashi, let's change it to candles. I like the way the candles look. And you can also, if you want to draw these up using market structure, you can hide these tools. You can use just plain market structure on them. So now we have the chart looking just like we did on our previous charts that we were marking up on our own. Okay, so it broke our trend line. It went through, retested, and pushed up. This is the area here where the bounce back told us to buy in. It pushed up 93 pips, retested that area. And if you know market structure and you knew that this was a retest and you had got in here and held it, you could have gotten 138 pips. And you could probably still be holding. It'll probably push up to previous zone. But yeah, you can go on these and back test them, look at them. You can see all of these played out. People have been getting 30 to 150 pips on these moves. So learn market structure, use the bounce back alerts to draw it up. Like it told you to get in here. And you see we had an impulse and a beautiful flag here. And right there at the break of the flag was your entry. So you could have put your stop loss right below this candle here. Your stop loss would have been right here. You could have wrote it up. When it started pulling back, if you were happy with 93 pips, you could have gotten out of the trade. When it retested and rejected off previous support, you could have got back in for another push to the upside or another 118 pips. So let's do one more.
Hey, can you draw that divergence line on that one? Too late.
Now, what about I let you do it after we get through recording, since you like to draw divergence? Because you can draw anything that you draw up here. You can also draw it on this is on the daily. Let's go down to the 4 hour.
Gigi, please show us where it shows you the entry.
It shows you the entry right here. It tells you 1.61942. So since if you were going live, you would see it live. I'm just doing this because I'm back testing it.
I got it. Thank you.
Yeah. 16191611942. So we can use market structure on these tools, and it gave us a sell. And if you got in on the sell, you're up 194 pips without any pullback. Yeah. And so if we look at the indicators, it had bounced off the middle Bollinger Band. Looking left, it had rejected just like that other pair we just looked at. It had the fake out to the upside. And I'll bet you anything that is previous. Yep, look right here. Looking left. I'm gonna hide these so we can draw it up the way we draw it up with market structure. If you put your triangle on there, your rectangle, why do I always call that a triangle? Look at that. Textbook supply zone, okay? Because the last time it was here, it pushed down, gives our impulse, our correction or our retest, and this pair dropped 995 pips the last time it dropped. So if anybody didn't get in this trade, you can go over to, let's mark it up on TradingView to see how long we could hold it. But that's just, this strategy is really good. and it's just going off the common indicators. If you see right here, it had crossed over here, and it had crossed over to the downside here. And if you got in, well, how many pips did we say you would have right now? Like 195 pips. So let's draw up Euro odd. Oh, that's the one we already drew up. So see, even we covered this and I didn't even realize it was one of the bounce back trades. But this strategy has been really good. So you could go here and use those same take profits we talked about earlier and the same strategy to get another entry in. So you would just wait for a correction and then a continuation. And I would put my next take profit around this area and then the next one around this area. Because as you see, this pair moves very, very volatile. You had a sell, flag, sell, flag, sell, flag. You just had a deeper correction. And then, because after like the second or third push, you always get a much deeper correction. The longer it corrects, the more it breaks up to the upside. See here, you had a long correction. And when it broke to the upside, you got, we won't include the fake out, but you got 569 pips pretty quick. Anybody got any questions on that? That's how you can use market structure in conjunction with the IML bounce back alerts to determine, just go down on a lower time frame for your take profits and your stop losses. See here, again, we see that perfect textbook flag that happened right here. All these are flags. Each one of these, you could have entered there. You could have entered there, 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 there. So even if you don't catch the first push, if you get on one of these a little late and you know how to mark it up, just say you missed the first push and you got down here, you know, you could catch each one of these additional moves. Just from flag to flag, this right here is an 80 pip move. That's a beautiful scalp any day. That's actually a day trade. There's a 73 pip move in that flag. So learning these flag patterns and this market structure will help you. Like if you had gotten into this flag, put your stop loss right above there. If you got into this one, put your stop loss right above the previous flag. All right. Anybody else got any questions on that? Is there anything else y'all would like to cover? What we normally do is we'll start recording, and anybody who wants to take a shot at marking up using market structure, just so they can get familiar with it, get some hands on, we'll do that. But before we do, anybody got any questions? Remember the pivot tool for those of you who came on later. If you're not good at marking supply and demand, why did I go to someone? Go to your daily. There's a pivot tool. You can turn that on. Take everything off here. All right, go to your daily, turn on the pivots, and I'll show you which one it is. You go to indicators, type in, because this will draw some supply and demand zones for you. Go to pivots point standard, okay? Go to the settings on it. And I like Fibonacci because we know Fibonacci is very accurate. And you can choose the colors that you want, but I really don't care about the colors. The most important one is the pivot point. If it breaks this, it's broken the point where it normally pushes it into a downtrend. It's a very volatile pivotal point. So what I do with these pivot points, you see it gives us support 1, 2, and 3. And I'll show an example. If you move it down to the 4 hours, it changes it based on the 4-hour time frame. You see where you got support right here. It broke through that, so this would be your next support area. And with each time frame, it adjusts your support and resistance. So like if you were scalping on a 15-minute time frame and you wanted to know where you would see your next point of resistance, and you see it's making flags around this as well. You can also adjust this to go back show historical pivot points. I turned that off, okay? But going back to the daily, I go on my daily. This is, for, again, for those who are not really good at drawing the supply and demand. If you want, you can draw either one of these, and you see how it pulls into that price zone where we see consolidation. Or you can draw a rectangle around them. I don't make them big because we are on the daily. You can right click on that and hit clone and drag it up to your next one. I guess if I zoomed in, it would help, wouldn't it? That's what smart people would do.
Excuse me.
Yes.
Where can I get this recording from?
Where can you get what?
The recording.
It'll be placed in the chats.
All right, thank you.
I hit copy instead of clone. Told you I'm getting old. I can't hardly see anything. But I put these here to give me some support and resistance or supply and demand. If you look at this, this goes hand in hand with our previous area. And I turn it off. You can just click on the hide button. That way I won't see it on my lower time frames, okay? And so you can go down to your 4 hour. So you're at a very important zone where you have consolidation. So you'll probably get your correction here unless the market opens with the gap Sunday. So you could get your correction and then a continuation to the downside. But you definitely want to see that correction or that flag pattern to continue selling it. Okay. Now, since it was a strong break, if you want to draw Fibonacci on there, you could see it pull back. Usually the stronger the impulse, the stronger the correction. You can see this pull back up into your 61.8. So if you're looking to enter this pair Sunday or Monday when the market settles, wait for it to complete its pullback before getting in. Now, if the market opens with the gap and opens up down here, same thing, you would wait for it to give us a flag. If it continues with a downtrend, it has a long way to go. It still has 648 pips. So don't be in a rush to get into the trade because it's got a long way to go. It does move fast, but look at it on a lower time frame. Like we said, here was the perfect flag. If you have been watching this pair and you saw this, I can tell you, get in the trade. If you see structure like this, get in the trade. All right. Anybody else got any questions? If not, I'm going to start recording.
So with the structure like this right there, how many pips would you initially go for?
Me, when I set my take profits, I go on my 4 hour and I would make like take profit here, take profit here, and take profit here. So you can open with like a 0.5. When it gets here, close it down to 0.2. When it gets here, close it down to 0.1 and let the rest ride. So you can secure partial profits and always use the lower time frame to move up your stop losses. Now, you don't want it too tight because if you're holding a long trade, like you got your first take profit here of, it fell 360 pips. So if you close out half of your trade and it pulls back into here and it continues to fall, you can also open up a second position and start stacking as it goes down at each take profit level, okay? And once it breaks this level, then you would put your stop loss above that previous take profit. Once it broke through this one, put it there. But you don't want it too tight because sometimes it can retrace up to 50 to 61%.
Okay, that's where I've been having some problem also. In addition to my entry, is my stop loss.
Yeah, your stop loss, you don't want it too tight if you're swing trading. If you're scalping, you can keep a tighter stop loss, but usually scalpers don't use a stop loss because they're trading live and closing out and doing market execution. But use your stop losses. Like here, if I had entered, I would have put my stop loss right above this because, like I said, this was a perfect flag. If I had entered here, I would have still kept it above there. But once it broke this previous level, you know, if you want to trail it, put it above the previous previous structure or the previous pattern. Now, if you look on the higher time frame, we'll go back to that 35 moving average. Thing. If you look on the lower time frame, you'll see with a lot of times with flags, it'll pull into the trend line, the moving average, and then continue down. So you could see this correction pull into that 35 and then continue down. Sherry, the same way you close out a trade, if you swipe to the left and it'll say, just say that your stop, your lot size is 0.5, you can adjust that 0.5 to 0.25 and it will close out 0.25. It's going to close out whatever you put in there. So like, just say you were $100 up on a 0.5 and you put close out 0.25, it'll say close with $50 profit, and you would just say yes and close it out.
Hey, Chase, quick question. You did say, like, if I watch one of Stevenson's lessons, he goes over market structure. So I can, and then now give me, because this is new to me.
Yeah, that's all he teaches. And another good instructor on IML is Oren Wright. He trades nothing but market structure. Kim Torres, I know she trades supply and demand. So she'll trade from zone to zone. She'll tell you to sell it here and hold it all the way down. But, you know, it's at your discretion. You get out when you feel comfortable getting out. Like,
and then with the MACD, does Lindo have a course on MACD or just like on YouTube for MACD?
Are you in the Facebook page about the IML bounce back?
No, I'm not. I am an AML. I will join the bounce back, and you know, because this is new to me. I'm used to more the market maker or using like Dr. Kathy strategies. So this is.
If you go to Facebook, go to, and it says IML bounce back, and join that group. He has a couple of training units on there that explain how to use the bounce back, but he does go in depth. And again, this is free until February 1st. After that, it'll be a $15 add-on.
Okay.
And I'm not endorsing it because none of y'all under me and I won't get any money for it. As you know, if you're an IML and you make $100,000, nobody gets a penny of it.
True.
But here,
but I did pay. I will be at. Will you be at US 30 boot camp?
Yeah, US 30 usually moves very well. We can cover that real quick if you want.
Yeah, because does US 30 really respect structure because of the way it moves so up and down like that, or?
Just remember, if the stock market goes down with it. So, yeah. But yeah, it does respect structure. The people who control the market, they deal with certain prices in their head. They don't look at a chart. They don't look at a trend line. They don't look at a moving average. They think of a certain price in their head and they say, I'm going to buy at this price or I'm going to sell at that price. So I've done 4 out of 5 units. I need to do the last one, I guess, but I really don't need it. But I'm going to do it just to say that I did it. But this is the IML bounce back. If you go over here, it says units. And this has the, I think this has the, one of these have the, there's the Telegram. So I'll put it in the chat. So you can get the alerts saying that a new alert has gone out. Oops, I sent it to the wrong. I sent it to Josh. Let's see. All right, everybody should have that now. But you go through all these units, and if you go to discussion, Lindor has done several videos in there. And like here, he told everybody, good morning, everyone. Glad to see everyone winning this morning. Below are examples of how all these trades played out on yesterday's training. Identify the trend, go to a smaller time frame, watch the MACD trend cross over. It's really that simple. And, you know, he outlined like right here, just like I just did, which I didn't even know he had did this, but I guess you can tell he's my mentor. Identified the trend line. He drew a trend line, the breakout candle, and the crossover here. So it's very simple. He drew the trend line. He says he gets in at the trend line break, but most people just get in when it says get in. Identify your trend line. You got your breakout candle, you sell, and also you can confirm that you had a crossover here at the MACD. So this will probably get here. If you look left, you had a pullback or a correction, so you'll probably see this pullback and correct, then continue down to here. All right. Anybody else?
Hey,
Oh, we
Gigi.
said we were gonna look at gold. Hey.
Hey, one of the things I wanted to point out, I heard somebody mention market makers, which primarily looks for M's and W's. And one of the things that I've said to my team is that the way you mark up actually exposes those M's and W's and makes them a whole lot more clearer using the market structure like you're doing. So if you do use market makers, you can get, you know, a pinpoint accurate entry doing it like this, because it will expose those areas like that. And I mean, I see it all over the screen right now that you're looking at.
And I will tell you now, these, and this is today when I was testing that pivot that I showed you guys. Yeah, you got an M, which is just, it breaks, retests, and then continues.
Yep.
And it does the same, the double bottoms. But that's just them. They're enticing people to sell. People jump in to sell, then it pulls back, knocks out their take profit. I mean, their stop loss, faked them out a little to the upside, making them think, oh, well, we're getting ready to go into a buy, and then it dropped off again. So you knock out your buyers and your sellers when you do that. But yeah, I use those pivots today to draw these just because I was testing it. And if you look, it's pretty accurate. This is
It's
US
hot.
30. Yeah. US 30 is, it does respect market structure. The only thing about US 30, if you look at US 30 on the monthly, it had no structure.
Yeah.
A big push and a big crash. And if you look at this, this is 2008. And, you know, people are saying that our economy is getting ready to crash back to 2008 prices. So if you scalp this, scalp with the trend or scalp with an aggressive correction. An aggressive correction would be like here, it sold. You had an aggressive correction when it pushes up with a bullish candle and keeps pushing up. But it's in a true downtrend. If you look at your daily, it sold, it made a little channel here, just like we saw with GBP JPY a couple weeks ago, and then the bottom fell out. Now that it's gotten here, it pushed up, but it got to this previous structure right here, as identified by the pivots.
Coffee.
Right here, and it's
There's a thing in
again. So if you look at this on the lower time frame, hold on, let me mute.
Sorry, I'm sorry, that was me.
Okay, I like coffee. You buy me some coffee. But if you look at the lower time frame, right here, it's starting to show some exhaustion. We can see it correct here, push up one more time, and then come out, because it's showing exhaustion. So if it doesn't break through here, it'll sell back down to here. If it breaks through here, it'll buy back up to here. I always trade this on the lower time frame, and I always trade it with smaller lot sizes.
Man, I want to make sure I understand the pivot points. Did you say that they line up with the Fibonacci if you have it set that way?
I set it to Fibonacci. That's my preference, yeah.
But then if you set it to Fibonacci, then they line up with the Fibonacci areas then.
Let me show you real quick. Let's turn it on. Let's see, that's not it. Pivots. Let's turn it on. And see, like I said, I had drawn these earlier today. If we change it to traditional, those are the traditional. It gives you more, but I'm not concerned with going all the way back down to here. I want to trade just right here in this zone. So you can set it to Fibonacci or traditional. It's up to you. I like the way these, you know, like we know that the market gives us back 50 to 61.8. So it's based on Fibonacci structure. Okay. Let me turn
Okay,
this.
thanks.
Yeah, it looks like the Fibonacci's one is more accurate to the pivots.
Yes, it does. I like it too.
I have a question about the reference to the Fibonacci with the pivots. Like, okay, so which of the pivots are corresponding with which of the Fibonacci
Well, let's
lines?
draw it and see, because I really hadn't tried it. I guess I need to turn it back on to do that, huh? Yeah, this is something I just started trying like yesterday. So this is our pivot point. So I was watching a training and this is what he suggested. So I'm wondering if the pivot point would be our 0. I didn't mean to do that. I did that. Did that. I would have to play with it to figure it out. I just know that everybody knows me, knows I'm a big Fibonacci person. Oh, there we go. So the 50% is your pivot point, it seems.
Okay.
It lines up that way. But you can play around with it and see. I like Fibonacci extensions because they're usually pretty accurate. Yeah, Grant, I think that's the reversal trend forming too on the lower time frame. That's why I said I think it'll fall off a little bit to the trend line. Maybe, and then push up one more time and then break. But it's got a lot of consolidation going on there. But yeah, this pair does respect market structure. It's just, you see how it bounces through here a lot. It bounces through here a lot. It's just very volatile. So if you want to know why a pair is volatile, look at this number here. This is worth 23,000 to the dollar. And that's why, you know, we traded Bitcoin, and Bitcoin used to be as volatile as US 30, but it's no longer that volatile because it's only worth 4,000 to the dollar now, where it used to be 20,000 to the dollar. And if you look at the US 30 that I was just showing you earlier, it's basically doing sort of like what Bitcoin did. It went on a steady climb. Another thing that did that was USD try. And then it started showing us some market structure. Anything that goes up crazy like that, you have to look for correct. Everything's going to eventually give correction. So that's, this US 30 hasn't corrected since 2008. So it was long overdue. The market hasn't corrected since 2008. This is the last time our market was this low, was 2008. I post a link every Friday, like at the last minute, Lawrence, in Dr. Kathy's chat and in my chat and Lindor's. Anybody else got any questions about anything?
Yeah, quick question. Because again, this is new to me. Are you in Dr. Linder's class when he offers his class on AML? Is that when you post the link, or?
No, I just post it like at 8:45 every Friday night.
Okay, is your link on Telegram or?
Telegram, yes. Whose group are you in?
I'm in Mike's group.
Okay. So yeah, he probably got it from Dr. K and them. So. Yeah.
And Dr. K, yeah.
All right, so let's mark up one more.
Okay.
We go on the monthly, and if you have a good trend, you can do your trend line. Okay. Or you can draw this one from the top, and the reason being is because our monthly is still forming, and it's not a good idea to cross through a candle that is forming. So if there's not a trend there or a trend line there, don't force it. So in lieu of a trend line, if you just want to draw where price is, where you would look for past price action, you can draw your horizontal rays. So on the monthly, this trend, this pair is an overall downtrend. We go down to the weekly, clean it up a little bit. And you can start drawing your trend lines in here. Now your horizontal rays, we don't worry about cutting through the wicks or the candles. We're trying to get as many touches as we can. The reason being is this is being used as our supply and demand zones. We're not using it to box in the actual trend line. Okay.
Gigi, what's that blue line in the middle? Does it mean anything?
That's that 35 moving average. I can hide that because I only use that whenever I'm looking for my pullbacks, actually.
Oh, you'll show us then another time.
Well, I went over it a little bit earlier, but I'll show it again. So if we look on the daily, we still have a good ways we could go on this. And you see we just got a perfect flag here. Okay. If we want to draw our pivots or supply and resistance using the pivot like we saw tonight, you see it shot through, faked out to the bottom through these two support areas, but it pulled back in. If you want to use your eyes to draw it, let's hide that real quick. You would just look left at areas where you see a lot of, and this is a good way you can test your eyes. Draw it yourself and then turn on the pivots and see if you get a good lineup. Like right here, you see price bouncing off this area a lot. Right through here, we see it bouncing off this area a lot. You want several touches. Again, supply is where sellers take control of the market, and demand is where buyers take control. The buyers take control here and here. Okay. I like to make mine good, even prices. Settings 122.5. Make this 126. Wrong way. There we go. That's more like it. So we're in a definite downtrend on GBP USD, and until it breaks this to the upside, we can continue selling after each flag. So it could, if it breaks this flag, then we sell until it stops making the flags to the downside. So you could see it break through, pull up, break through, and pull up, retest, and then go to the upside. And that's a lot of movement because this is on the daily. So if it does that, you're looking at 600 more pips to the downside. Now, if you're going to trade it on a smaller time frame, you go down to the 4-hour, and it's already rejecting off this area right here. So you could look for this and then sell it from the top. I would wait till it pulled up again and sell it from the top. Because right now you see on the MACD, it has crossed over and it's pushing to the buy side. So you'll probably see some more consolidation in there before we get a sell-off. And then you'll be looking for something like, oops, it's not what I wanted. Start looking for something like this to happen. And then sell it down to here. And that would be your first move. So you let your flag finish. If you want to wait till the break of the trend line, you can sell from here. If you want to catch it from the flag at the top, let it pull up here, and you would enter off your 15-minute. And it starts getting distorted when you zoom in, but already we have a crossing here of the MACD, and it's going to the downside. So that would have been a good time to enter to catch the continuation of this sell. But you could see at least 2 more moves to the downside. You can see this one break and come through, and then see another one of these break and come through here. So that's how I would trade this pair right now, because anytime it rejects off this trend line and gives us a flag, you have an opportunity to sell. And of course, we would make these sells on the lower time frame, and we are looking at a possible 672 more pips if it continues dropping to the downside. Okay. Now, conversely, if we get a break to the upside, you would wait for an impulse, a correction, then you would buy it up to this area right here. Because what happens at this area here, we see a strong area of sellers. So that would be your first take profit area if you bought up. So you can go on GBP USD and draw a trend line on the 4-hour. If it rejects, you can sell it down to previous demand zone. If it impulses, corrects, and pushes up, you can buy back up, and the buy would give you about 400 pips. Now you could see it buy up to here and then correct and push back down. So you just take it one move at a time, because it's been on a big downtrend. And it's also, if you look, it's basically creating a channel here as well, right here. And we see that a lot with the GBP pairs. They trade in channels a lot. So you could sell it every time it gets to this area and buy it every time it gets to this area, if it doesn't break through. Now, my instinct is that it's going to push down, because here you have another strong area of consolidation where it was doing basically the same thing it's doing now. But this right here is an extremely strong sell zone. Okay, so that's why it's always important with market structure to look left, because if you look at this right here, all of this right here, the sellers were taking control of the market several times at this area. But still, you have a setup either way here. You're either going to wait for the flag to form and continue selling, or impulse correction and then buy it to the upside. All right, anybody else got any questions? Anybody want to volunteer to be the first person to mark up tonight? Don't everybody get too excited.
Question,
I can do so.
Okay.
Your Telegram, is it through iBuild Legacy or?
Yeah, I am in Dr. Kathy's Telegram, yes.
Okay.
I'll mark up as well.
And do you post recordings there in
Yes.
Dr. Kathy's group?
I usually give them to Shantae.
Okay. Yeah, I know Shantae. All right.
I can mark up.
Okay, who was that?
Josh.
Josh. Who was the first person? I heard a lady say she was going to mark up. Okay, I'm going to stop
Georgette.
sharing, and I'm also going to stop recording. Hold on.
Gigi, how soon are we going to get the recording, please?